So here is your last lecture. So we finished total assets, we finished total liability, we have current liability and non-current liability, and in your current liability, I already explained you accounts payable, bank overdraft, unearned income, and outstanding expense we will learn today. So before we continue with our total liability, which is current liability, anybody has any question? Anybody has any question? No questions, so let's start. Min to Nguyen. Min to Nguyen.
Yes.
Are you sitting or are you laying?
Can you say it again?
Are you sitting or are you laying? You're not supposed to lay when are you studying.
No, I'm sitting.
I don't think so before you were sitting. So please sit like as the other students so I can see you that you really focused. Yes, thank you. All right. Okay, so now let's start with unearned income. Now, what does it mean, unearned income? So, in order to understand unearned income, I need to explain you about income. What is income? So, let's start. If no question. Okay, so current liability. Current liability. So in this current liability, we're going to talk about the unearned revenue. Unearned revenue. Remember, it's very important. We call it unearned income or unearned revenue. Everybody knows what is the meaning of revenue? Yes or no? No, you don't know revenue?
Yes, I know revenues.
So if you don't know revenue, revenue means selling product and service. So whatever money we earn from selling product and service, we call it revenue. Revenue is your income. You're making money by selling product and service. Now, what is unearned revenue? Now, we have two types of revenue. One is earned revenue, and another one is unearned revenue. Now, what is the difference between earned revenue and unearned revenue? Earned revenue means you you already you already supplied product and service. That means you earn money. Earn money means I give you product and I give you service, so means I earn this money. So you already supply product and service. Unearned means you receive money but haven't supplied or haven't delivered or haven't provided product and service. That's called unearned revenue. All right? Earned revenue and unearned revenue. I sell you product, you pay me money or you pay me later, doesn't matter, but this is called earn. I earn money. You know the word called earn money? Earn money means you did something, then you make money. You provide service, you provide products, then you earn money. This is called earned income. You work, you perform service, you provided product, then you make money. And second is you do not provide money you do not supply product right now, but customer pay you money right now. We also call it income received in advance. Have you heard this one, income received in advance? Income received in advance means you haven't earned money, but you receive money. Haven't earned means you haven't provided product to the customer, you haven't provided service to the customer, but customer already supplied you, already gave you money. Have you ever heard that? Yes or no? Have you ever heard? Yes or no?
No.
No? I think
Can you give example about that?
I will give you example later, but can you tell me, have you ever any experience where you pay money to the company right now, but company do not give you product right now? Have you ever faced that kind of?
Teacher, insurance, do you think?
Not really. Insurance, they may give you, they may, insurance they give you. Insurance they giving you service.
Okay.
Is
They give
it,
you insurance. You pay money right now, insurance start from today.
Is it the same with invest? Or is it different?
Same
Is it the same with invest or it's
Or
different?
deposit.
invest is your asset. How can invest here? No, not invest. Invest is your asset. We're not talking about asset. Yes. Give me very, very, very simple example that you have an experience where company earn money, company receive money, but company do not give you product. And I'm 99% sure you have that experience. Any small product, any service, anything where you pay money first, but company do not give you product or service right now. They pay you, they give you service later.
Teacher. Oh, okay.
Yeah.
You can
Yes.
say it. You can say it.
Okay. Anybody say something first?
Teacher, what about deposit?
What do you mean by deposit?
Like when you buy a mobile phone like iPhone 13, you must deposit the company your money, so they will ship your phone to you later.
But that's not very common. That's not company always do. So sometimes we don't do that too. We can go to shop and we pay money to mobile phone and we can do that.
Okay.
But this example is always company receive money first, and company give product later. So company always have unearned income, this type of thing.
Yes. So teacher, like I have experience like buying online on Lazada or Shopee. When I see the product, they we can pay on the credit card. And we send them the money, the transaction first, and after that, a few days later, they will ship the product for us. Is that
Yes,
on or
maybe yes, that could be unearned income for company. The best example for unearned income for company is your university. Your university, right? This is university, right? And this is you, student. What student do? Student pay money now, but company, university study supply study later. So what university is doing here? University receive money in advance. So means company, so you pay money. Company hasn't earned this money. Company has a liability to provide service. Company has obligation. Company means university. University has obligations to give product or service, like as Lazada or the example you gave me before. You are buying product online. So Lazada company or whatever company, they receive money in advance, but Lazada hasn't provided you the product yet. So this is Lazada obligation to give you product or service. So if something is a obligation, in order to what I was saying, yes, so it's a obligations for company, and if there is an obligation, that is your liability, right? So this is your unearned revenue. That's the meaning of unearned revenue. Earned revenue is not your liability. This is your income. That income belongs to your income statement that you will study later. But we are talking about unearned revenue. All right. So unearned revenue, any kinds of revenue you haven't earned yet. Now, if I say you haven't earned, it means you haven't delivered product and service, but you receive money in advance. Right? This is called unearned revenue. Another example for unearned revenue, one example is Lazada, like what example she gave before. And another example for unearned revenue is a birthday cake or any cake that we go to shop and we buy. So before we go to buy cake, like as wedding cake, the best example is wedding cake, because wedding cake is normally they don't make and they don't keep in the shop. You go to the shop and you order a wedding cake. So when you order the wedding cake, you have to pay money in advance. So let's say you pay 1 million Vietnam dong for wedding cake, and it takes maybe 1 week or 10 days to bake the cake. So means the baker shop already received money in advance, but that baker shop hasn't provided the product to the customer. So the money that baker shop receive, that money is not a revenue. That money will be treated as a liability until you provide product to the customer. Let me write down for you, make it very clear. Like as today is a Thursday, right? Today is Thursday. And this next is a Monday. So for example, customer go to the shop and order a cake. And customer paid 1 million Vietnam dong. Customer paid 1 million Vietnam dong to this baker shop on Thursday. And company said, we will deliver product. The product will be delivered, product will be ready on Monday. But company already received this 1 million Vietnam dong. So remember, from this day until this day, this revenue, this money will be treated as a unearned income, because still you have obligations to provide this product to the customer until Monday, your liability until Monday. Once on Monday, you already product is delivered to the customer, from this day, your unearned will turn into earned income. So this day, your current liability finished. This day, your current liability, no more current liability. Your current liability become earned income. Did you understand that? So Thursday to Monday, you write down this 1 million Vietnam dong as a unearned income. But on Monday, once you deliver product, then no, you remove this 1 million Vietnam dong as a earned income from your current liability. So means your current liability reduce. Your liability reduce. Why? Because you already deliver product or service to the customer. But you cannot remove 1 million Vietnam dong before Monday, because Monday is the day to supply the product. Monday, your obligation finish, your liability finish on Monday. So obviously, liability finish means your unearned income finished. It's no more unearned income, it's become earned income. And earned income belongs to your income statement that we will discuss later. All right. So earned income become your revenue. It's become your real revenue that will be recorded as a income statement. Right. Everybody understand the meaning of unearned revenue? So I repeat now, what is the meaning of unearned revenue? Unearned revenue is any kinds of revenue that company haven't earned yet. Earned means company received money, but company hasn't supplied product or service to the customer. Or you can say that unearned revenue is any kinds of revenue that company earned in advance. Advance means now it's a company obligations to supply that product and service to the customer. Everybody understand? Yes or no?
Yes.
Now let's move on to the second, which is the last current liability, which is outstanding expense. Second is outstanding expense. Outstanding expense. Now, what is outstanding expense? It's very simple. Outstanding expense is that kind of expense that you have not paid yet. You haven't paid yet. It's time to pay, Due date already come, but you haven't paid it. So that expense become your outstanding expense. For example, the last date to pay the tuition fee was, let's say, 1st of December was the last date to pay tuition fee. And today is 2nd of December. So this, if you haven't paid your tuition fees until 2nd of December, on 2nd of December, this money will become your outstanding expense. So let's say your tuition fees, for example, $3,000. So you haven't paid $3,000 until this date. So this $3,000 belongs to your current liability. Any expense that you haven't paid yet. Haven't paid yet means, if I say haven't paid yet means, deadline already come. In fact, deadline already passed. That's why it's become outstanding expense. Deadline already come. You haven't paid your electricity bill. Deadline already gone. Deadline already reached. You haven't paid your tuition fee. You haven't paid salary to your worker, to your employees. You haven't paid your internet bill. You haven't paid your factory rent, right? So this is your outstanding expense. Outstanding means, another way to understand, outstanding means any kinds of expense which is due. Everybody knows the due. The expense which is due. All right. Any kinds of expense which is due, that's become your outstanding. And why it's a liability? Because you have obligations to pay. You haven't paid yet. You should pay because time already come. Anything happen, because every expense has a due date. Every expense has a due date. Employee salary, end of the month is a due date. Electricity bills, due date. Water bill, due date. Internet bill, due date. Everything has a date. If you are not paying your expenses on time, you're not paying your bills on time, those bills become due. Due means outstanding. Still due. Everybody understand? Yes or no?
Yes.
So that's all about your current liability. Current liability is finished. So means total liability is finished. Now let's move on to equity. All right, let's talk about equity. So let's start with the equity. So liabilities are finished. Equity. What is equity? In simple language, equity represents shareholders' money. Shareholders' money. Anything which belongs to shareholder, that's called equity. So what inside equity? Inside equity, we have a share capital. What is share capital? Share capital means when companies sell share to raise capital. Capital means money. When company sell shares to raise capital, to get the money, company issue share, sell share to raise money. This is called share capital. More share you sell, more share capital will increase. Capital means money. Capital doesn't mean share. Capital means money. You sell share. The more share you sell, the more money you receive. This is called a share capital. The money company raise, not earn, company raise. Raise means company get it. Company get or company collect or company receive. The more money company, the more shares company sell, the more money company raise. All right. This is called a share capital. Everybody understand share capital? Right. Now, next is a net profit. Net profit. What does it mean in net profit? You know that net profit means sales minus cost is net profit. Net profit belongs to company shareholder, because shareholder are the people who are investing in a company, and company promise to pay them a profit in a share. So whatever profit left, that profit belongs to shareholders. So net profit is sales minus cost. All right. Everybody understand that? Yes or no? So that is your equity. Equity is finished. That's all for equity. So equity, you have only two items, share capital and net profit. Net profit, you will study later that how we can calculate net profit, which is generally sales minus cost. Sales means revenue, cost means expense. So revenue minus expense. Is that okay, everybody? Can we move on? Okay. Now let's
teacher.
move. Yes.
Is all the profit belongs to shareholders or some goes to the company?
Generally, okay. Theoretically, yes. Practically, it depends. So for your question, I would say yes, profit belongs to shareholder. Because just think, what does it mean shareholder? Shareholder are holding a share. So they also have share in a profit. So means if we have one shareholder and we have this profit, all profit belongs to shareholder. So theoretically, yes. Practically, it depends upon companies to company, but generally the answer is yes. Right? Later, so when you almost finish your topic, no, not this financial accounting, when you study your corporate finance subject, then you understand that why I said practically all profit do not belongs to shareholder, but financial accounting point of view, yes. But in reality, in real life, if company profit is $100, company may not give this $100 to shareholder because of some reasons, investment reasons. That's we will discuss later.
Thank you.
Yeah. So now let's move on to the next. So equity is finished. Before I continue to the next, let me ask you a question. Is that right or wrong? Is it true or is it false? What do you think? Is it true or is it false? Tell me, anybody?
I think it's true.
It's true? Anybody else who thinks, no, it's not true?
I think it's false.
It's false. Anybody else who thinks false? Just raise your hand over there.
Yes,
you
I think it's also false, teacher, because the access also have a current and non-current access, and I think this did not cover on the total access.
Why?
Based on
I write total asset. Total means current and non-current.
yes, but the third yes, but based on this equation, I don't think that it cover on the access.
Why not? Total. What is total asset?
It have to have the current and non-current one.
Yes. So total means current and non-current. I need to write like this? Do I
No,
need
no,
to-
no, 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 no. No, that's not what I mean. It's just the non-current access include the intangible like the brand name, the copyright and patent, and the total liability and equity. I don't think it's have that.
Okay. Anybody else who think false? Anybody else who think is false? Let me show you something before I give you answer for this. Because until now, only one student said it's true. And 3 students said it's false. Where is the last lecture? Let me find the last lecture. I think I erased. I did not save that information in the last. lecture, I guess. Yes, I didn't save that file. Okay, no problem. All right, so the answer for this statement is true. Okay, generally this statement is true. Why this statement is true? What come first? Assets come first or liability plus equity come first? Tell me, what come first?
Liability and equity come first.
Yes, generally equity come first. If we need money, we take liability. So this is, what is this? This plus this. What is this?
Money.
No, don't say money. Money is very ugly word. Beautiful word. Anybody?
Revenue.
Revenue? What is revenue?
Capital.
Capital. Yes. Capital. What is revenue? Why is it revenue? Capital. Right? Capital come first. And what we do with this capital? What we do with this capital?
We buy assets.
If you buy assets, what do we call it?
We invest.
Invest.
Invest. We use capital to invest. Invest where? Invest in total assets. So my money, I have, for example, my capital, total capital is $100. So how much I will invest? I will invest $100. So what I mean, $100 equals to $100. Is that true? Yes, it is true. Remember that. Can I say, now you tell me, is it true or is it false? Can I say, TA means total assets, TL means total liability, EQ means equity. Can I say total assets minus total liability is equity? Is it true or is it false? Tell me. Is that true or is false? Okay. Anybody else who think false?
I think it's false.
It's false. Okay. And it's true. If you say, remember, if you say true, you have to tell me why. Not because everybody's saying false, so you will say true. If you give me answer true, you have to tell me why it's true. Let me write in another words. right? Is it true or is it false? It's true.
It's true. Yeah.
Can I say is it true or is it false? True. So mathematically it's true. Mathematically it's true. Total assets 100, total liability 30, equity 70. Mathematically is not wrong, is right. But now question is why? Why total assets minus total liability is equity? What does it mean, total assets? Something we owned. Something we owned. And what is total liability? Something we owed. Yes or no? Something we owned,
Yes.
something we owed. Okay. I owned $100. I own $100 and I have to pay $30. After paying $30, whatever is left, that belongs to me. That belongs to the shareholder who invested money in a company to buy assets. Technically, I am investing shareholder money in the assets because asset is the total money, right? What is assets? Asset is a total money. In this total money, if I remove this liabilities money, which is bank money, which is fixed liability, whatever is left, is it belongs to shareholder? Yes or no? Yes. Did you understand that? I repeat again. This is total asset. So you have to understand what is total asset. Total asset means the money, which money? This money and this money we invest here. Means bank money in simple language and shareholder money, right? Do we need to return shareholder money? No. Do we have to return bank money? Yes. So after return bank money, whatever money is left, is it belongs to shareholder? Yes or no?
Yes.
Yes. That's why this statement is correct. That's why this statement is correct. Everybody okay with it? Yes or no? Say something.
No, teacher, can you say it again? I'm not clearly getting.
Okay. Total assets. What does it mean, total asset? Total asset is the money that we invested, right? And where this money come from? This money come from bank, which is called liability, and money come from shareholders, right? And last time I explained to you, if you borrow money from bank, do you have to return that money back? Yes, you have to return that money. No chance that you don't return that money. You must return that money back to bank. So your total asset is $100. If you want to return money back to bank, how much money you return? You will return $30, right? So after returning $30, whatever money left, is it shareholder money? Yes, because 100 minus 30 is 70. And what is 70? 70 is the shareholder's money. 70 is the shareholder's money. So after subtracting total liability from your total assets, whatever is left in a company that belongs to shareholder. I can explain you another way. One student before asked me, teacher, whatever net profit we have, is it belongs to shareholder? And what I said yes, theoretically. Now, what is the meaning of net profit? Net profit means sales minus cost. So can I say net profit means whatever is left after subtracting cost from sales? Can I say that? Yes. So technically, also this equation, which is sales minus cost equals to profit, also proves that whatever is left in a company, that belongs to shareholder. So in simple language, whatever left in a company, it belongs to shareholder. And that's also happened with the owner. Owner means whatever left, right? So that's the meaning of this. So that's why total assets minus total liability is equity. This is the another way to understand this equation. This equation and this equation. When you start your company, you like this. But when you close down your company, you sell your asset. If you stop your company, how you return money back to shareholder? You sell your asset. You sell your asset. You got $100 after selling the asset, and now you start paying to your shareholder. Oh, sorry, bank. And after paying bank, whatever is left, that comes in shareholder pocket. When you start company, some money come from shareholder, some money come from bank, and you have total money to invest. So you start your business. But when you wind up your business or you profit distribution or anything you distribute among shareholder, you always do this, because this is the total value of the business. Total value minus the money you borrow. This is your actual money. Your means shareholder, because shareholder are the controller of company. This thing you will understand step by step, time to time. And of course, this thing you also study in your corporate finance again. But corporate finance, you study more in calculation things. You also have a calculation how to calculate the shareholders value and blah, blah, blah. But in financial accounting, you're not going to calculate this thing. But this is a just idea to understand, to not to just look at only one side. This is the another side, another directions to see the company. All right, because you have a different directions to look at the company. Company is not just only one way to look. Sales minus cost is profit, and that's it. We have different way to understand the company. So this is the one of the way, another dimension of companies. Profit distribution or whatever you want to say. So everybody okay with it?
Sir, can I have a question?
Yes.
Is that true if I say that the total assets is minus the equities is equal the total liability?
Yes,
Is
why
it-
not? Yes, it means if in your total asset, if you minus the equity, the money is left, you have to pay to the bank. You can say that. But technically, we minus total liability first, because you have to pay the money you borrow, you have to return that money first. Right? The money you borrow, for example, in your company, you have a sales. Okay, I ask a question. Is it sales minus cost is profit, or sales minus profit is cost? What is correct? One or two?
One.
One makes sense, right? But you said total assets minus equity is total liability. That's fine if you want to calculate how much is your total liability. But technically, total liability is fixed. Why don't you just minus the fixed item first? Why don't you just say total assets minus total liability and then equity? Like it's cost. Cost is your total liability. This is your fixed liability. You have to pay. You can't ignore. All right. Technically, that's cost here. Right. Sales means you invest assets to make money. Sales is make money. Profit, money belongs to shareholder. You can say that. Again, different way to understand the situation. Everybody okay with it?
So if you say the profit is belong to the shareholders, so other people in the company, do they have profit?
Which other people?
Like employees.
Employee is not profit. That you will study later. Employee is your cost. When I will explain you about income statement, in income statement, I will explain you what inside sales, what inside cost. Then you really understand what is the meaning of cost. All right. So the salary you are paying to your employees, they never share in profit. Only
Okay.
who have a share in profit. The boss has a share in profit, not employees. Employees, they have salary every month, fixed salary. Like as probably I work in one university pay me fixed salary. University don't give me a profit sharing. The university shareholders, they have profit sharing, not me, right? So when I will explain you cost, which is next, then you understand more in detail what inside cost. Can we move on? Anybody or any question?
Yes, you can move on.
So student, but make sure this information maybe is too fresh for your brain. So please, at home, you read this information, and whatever questions comes in your mind, you ask yourself first that what should be the answer of this question. If you have a doubt, then you can ask me in the next lecture, you can send me email. But the thing is that this is very important things. All right. So if you understand, that's really nice. But if you do not understand 100%, that's fine. It's okay. You don't have to worry. I'm not saying that you should understand everything whatever I'm writing on this slide. That's fine. But I'm just trying to explain you that before you come to the next class, which is I guess tomorrow, at least you read all this information in detail. Not read, I mean understand. Okay, that's the meaning of this, that's the meaning of this, that is why this one this, why this one that, what is unearned revenue, what is outstanding expense, blah blah blah. Right. Now quickly move on to the next one. Now next is a income statement. Income statement. What is income statement? Income statement is simple. You have a sales minus cost. It's profit or loss. So obviously, if sales is less than cost, you have a loss. I guess I don't have to explain this thing. All right. Now, what inside sales? Sales indicate income. and cost indicate expense. All right. So income. You have two types of income. Operating income, we call it operating revenue, operating income, and we have a non-operating income. Non-operating income. Operating income is any kinds of income that we make by selling product and service. Selling product and service. Company sells product and service. So whatever money companies sell, it's whatever money company make by selling its product and service, this is called operating income, right? Non-operating income. What is non-operating income? Non-operating income means any kinds of income that company make it not from selling product and service, something else. Because company have another source of way to make money, like as company rent received. Rent received. Because company has a building and company put on rent, and the tenant will pay rent to the company over the period. This is called rent received. Maybe discount, discount, interest received. Interest received. You deposits money in bank, company keep money in bank, and bank gives you interest over the period of time. This is called interest received, etc. Something else we will discuss later, but I'm just giving you quick ideas to understand what are the operating plus non-operating is the total revenue. Revenue means sales. So this is operating. Now expense. Same like as income, expense also have two types of expense. Operating expense, and non-operating expense. Operating expense, any kinds of expense that belongs to company product and service. So operating expense, we have two types: manufacturing expense, and another one is a non-manufacturing expense. Manufacturing expense means any kinds of expense that belongs to factory. We have material, we have labor, we have some other expense related to factory. Non-manufacturing means like as marketing and advertising, maybe renting an office, maybe salary for people, right? These are non-manufacturing. So all these are operating expense. I'm giving you very quick ideas. This is not all, but just quick idea, because later we will study all these things in detail, because we have a separate topic, separate chapter about it. Non-operating means any kinds of expense that not belongs to product and service, because operating means belongs to product and service. Non-operating not belongs to product and service. What these are? We have an interest payment. We borrow money from bank and we have to pay interest. So interest is your expense. Interest payment is your expense. And another one is did I explain you this word in the previous lecture? Did I explain you dividend? Yes or no?
No.
No. Okay. Dividend, same thing. You know that, but maybe different name. Dividend means That's the meaning of dividend. When you share profit among shareholder, this is called a dividend, profit sharing, right? So that's all. Everybody okay with it?
Teacher,
Yes.
can you repeat non-operating income?
Okay. Non-operating income. Non-operating income is any kinds of income that company make not from selling product and service. It's an income. Income is making money, but company not selling product. Like as rent received. Rent received means, for example, company has a 3 floors building. Company use only 1 floor. Company do not use 2nd floor and 3rd floor. And 2nd floor and 3rd floor is empty. So better company that put that 2nd and 3rd floor for renting another shop or another company, so they can rent it and make money. So this is called rent received. This is just example. We have many example, but I'm giving you minimum example in order to save time, because this topic we start again. Interest received means, like, for example, company has a money, and company keep money. Company keep money in bank. When you keep money in bank, time to time bank gives you interest. So this is called interest received. So interest received, your non-operating income. All right.
Thank you.
So everybody okay with it? Yes or no? So income statement is finished. So the components, the 5 components of financial statement, or no, financial information is finished. Assets, liability, equity, income, expense. All right. Any question before we move on? Now we will discuss about operating guidelines. What are the operating guidelines? Because we already understand the objective of financial statement, right? We already understand qualitative characteristics of financial information, right? Third things, components of financial information. And the fourth is operating guidelines. So we have 4 things related to conceptual framework. So operating guidelines we will study next. So operating guideline is the last point for your topic 1. So hopefully today we can finish this topic. So before we continue, I think we can have a break now. And after break, we will start with operating guidelines.
Can I have a question?
Yes.
About the non-operation income? That's for example, that a company A that's selling product, and they have a profit by selling it, and they invest in another stock company, and they have a profit. Is that mean that company have a non-operation profit?
Yes. Whatever money you make, it doesn't matter what you do. If you are not making money by selling product and service, still it's non-operating. Yes, you are right. That would be non-operating income, because when one company invests money in another company, so it means one company is buying another company's share. So one company becomes shareholder, right? So that company buy another company share. So means this company receiving a dividend. So dividend is your income, and this income is not operating income. So this is your non-operating income.
Yeah, I got it. Thank you.
All right, so now let's move on to the last point for our topic, which is operating guideline. So number 4, conceptual framework, number 4. Conceptual framework. So we are discussing about number 4, which is operating guideline. Operating guidelines. So in this operating guideline, we're going to focus on 3 things: assumptions, principles, and constraint, right? We're going to focus on the assumptions. We start with assumptions. Assumptions basically tells us about foundation of accounting process. When you want to do accounting, when you going to follow your accounting process, which is recording, classifying, and presenting, when you do your accounting process, what is a foundation? What are the basic things you require, right? So assumption is about the foundation of accounting process. Is provide the guidance for the foundation, or you just know all these things to know about the foundations of accounting. Accounting process. Right? All right, so in this foundation, we're going to focus on 4 different assumptions. First is a monetary unit assumptions. Monetary unit assumptions. What is monetary unit assumptions? Monetary unit means in business, we record only those items which can be measured into money. Something do not have any money value, we do not record that information. So let me write down. When we do accounting, or when we do prepare our accounts, we record only those information which has a money value. Money value means we can measure into money. All right, money value means we can measure into money. So, for example, in one company, how many black people work? How many white people work? Can we measure in terms of money? No. In company, how many women work? How many men work? Can we measure into money? Again, no. So for financial accounting point of view, this information is not a monetary information. All right. So in company, how many workers are working and how many supervisors are working can be measured in terms of money? Yes, we can, because the salary for workers and the salary for supervisors is different. So we can measure in terms of money. One person in one day, how many hours that person work can be measured in terms of money? How much we pay money to this person in one day can be measured into money? Yes, we can. But of course, we have to pay them salary, and salary be measured in terms of money. So anything which has a money value, we only record that information. Anything which do not have money value, we do not record in terms of money, right? Like as emotion, relations, affection, feelings, we generally don't measure in terms of money. So we don't record in our financial accounting, right? That's maybe useful for management accounting, but that may not be useful for financial accounting. Next assumption is business entity assumption. Business entity assumptions. Now, what is business entity assumptions? According to business entity assumptions, business, now business entity. What is business entity? Business entity means business and the owner of business, and the owner of business are separate. They are not same. Remember that. I repeat again. Business and the owner of business, they are not same. Now, what does it mean not same? They are separate. For example, if business has any expense, do you think that expense will be paid by business from business sales or paid by the owner personal income. If business has any expense, that expense we paid from business income or the owner pay from personal pocket.
I think it's a personal pocket.
Personal pocket? Why personal pocket? It's a business expense. It's not a personal expense. So we pay from business income. Why personal income? Personal income is profit. Right? So for example, let me give you another example. That is, the owner of the company takes some. Can you please turn it off your mic? Turn on your mic. So for example, the owner of the company takes some customer out for the lunch because they are customer, they bought product for company. So company owner want to make a good relation with them. So they take that owner took those customer for a lunch or a dinner. Right? So do you think that lunch expense is a business expense or it's a personal expense?
Business expense.
Business expense. If it's business expense, must be minus from business income, not from personal income. All right. So that's the meaning of business and owner are not same. They are separate from each other. Let me give you another example. Let's say the owner of the business take his family member out for a lunch or dinner, and he spend $100. So now, can you tell me, is the personal expense or the business expense?
It's expense.
Personal expense. So can we minus that personal expense from the business?
No.
No, because it's not a business expense. So that's why business and the owner of business, they are separate from each other. They are not same. All right. Everybody understand? Now next, let's move on to the next. Now next is a time period assumption. Third is time period assumption. Now what is time period assumptions? Remember when I was explaining you about the difference between financial accounting and management accounting, I explained you about the period. Did you remember the period? What period I explained you?
Yes, from financial accounting is maybe 20 months or a quarter, and management accounting is a period is quickly or monthly.
Yes. Financial accounting provides information for maximum one period. One period means 12 months, all right? 12 months. So what is time period? Remember, 12 months is a financial statement, all right? Company prepare financial statement for 12 months. But generally, company announce profit every quarter, right? Announce profit every quarter. Quarter 1, quarter 2, quarter 3, quarter 4. This is called time period. So in simple language, time to time, company provide financial information, not financial statement. Financial statement for 12 months, right? Financial statement lasts for 12 months, but company providing information every quarter. And then all the quarter are finished, company combine all the quarter information in one financial statement. So one financial statement is a combination of 4 quarters information. but company announced in a market quarter by quarter. So means in 1 year, company announced profit 4 times. The question is, why company is announcing profit 4 times? Why do not company just announce profit 1 time at the end of 12 months? The reason is market has an opportunity. You know that market continuously changing. So market has a opportunity. All right. So market has a great opportunity. So if information is too late or information is too old, that information may not help the users to make a right decision. That's why in order to provide the latest or current information to the users, company inform the informations to the users time to time by quarter. But once after the 4 quarters, company combine all the 4 quarter information put in one financial statement. So one financial statement contains same 12 months, but generally company announce profit quarter by quarter. Same like as you finish 1 semester, university give you result. You finish 2nd semester, university give you results. University do not hold your result until your final year, because let's say you studied 3 years, bachelor 3 or 4 years. So company and university announce announce your result 2 times in a year. 1 semester, 2nd semester, 1 semester, company give you result. 2nd semester, company give you result. 3rd semester, company give you result. 4th semester, 5th semester, 6, 7, 8. And then university combine all the results in a one transcript. All right. Everybody understand? In 1 degree, company combine all the results. Exactly same like as financial statement. Financial statement contain for 12 months, but company provide information to the users quarterly, time to time. But the statement company give at the end of the year. Like as you receive degree after 4 years. You do not receive degree after 1 semester. All right. So that's the idea behind it. Everybody understand it? Everybody understand time period?
Yes, teacher.
Yes, I got it.
Now let's move on to next. Number 4. Number 4 is a little bit, I would say, interesting, or I would say sometimes it's tricky for the students, but I think you should be okay with number 4. All right. Number 4. Number 4 is a going concern assumptions. Going concern assumptions. Now, what is a going concern assumptions? Going concern assumption means, let me explain you what is going concern assumptions. For example, can you tell me why are we studying a business? Going concern. What is going concern assumptions? Going concern assumptions means we assume that we have assumptions that business will be going on. All right. We have that assumptions that business will be going on. What is that? So this going concern assumption also implement in our daily lives, in our personal life. Now let me explain to you. Now, can you tell me why are you studying right now? What is the reason for you to study? I mean, this qualification, your bachelor degree, what is the reason to study every semester the course? Tell me. Why are you studying? Tell me, why are you studying?
In order to have financial statement analysis skills.
No, I mean, why are you studying every semester, the courses, every year you are studying? What is the reason?
I think it's to widen knowledge, to gain knowledge. You can have many personal skills.
So
And-
knowledge or degree?
Two.
Yes, so degree in the knowledge, of course. So means, okay, now all of you, are you sure that by the time you graduate, you will be available there, or you will be there to receive your degree? Are you sure about it? Are you sure that you will graduate on time? How many % you are sure that you will graduate on time? Tell me. 100% sure that you will graduate on time? Say something. Yes or no?
No.
No.
So
Okay. Are
Actually,
you
no.
okay? So you study to receive a degree. Why you need a degree? For what?
Job?
To get a job. For what? Why you need a job?
To make
For
money.
money?
Make
Earn
money.
Earn money. Why you need money?
Well, to survive.
Survive. You do not need a job to survive. You can survive without having a job.
So can you repeat the question? Like what?
My question is, why you need a job?
Why you need?
So you go to school. So at the end of the year, you pass from the school, you go to university. So you go to university. So you assume at the end of university, you will receive degree. So you can apply for a job. So you assume that you will, after this qualification, you will have a job. So when you just come to the job, you assume because of this job, I will have money, so I can have a better life. Financially, I'm able to pay all my bills. So that's the purpose of getting a job, to pay your regular bills and get more comfortable life in terms of financial affordability. So that's mainly purpose. Now let's go back. Can you tell me, when you come to the high school, you were sure that at the end of high school, you will be alive to receive your degree, your diploma? You were sure about it? When you come to the high school, were you sure that at the end of 2 years, you will pass with very high score? You will be alive to receive a degree, or you will be alive to get the qualification from high school? You were sure about it?
Yeah, no, we're not sure about we can get a diploma.
Like the same now. You are studying your bachelor degree. Are you sure that after 3, 4, 5, whatever, I don't know, let's say after 3 years, you will be alive to receive a degree? Because you are investing money for 3 to 4 years. Do you think after 3 to 4 years, whatever money, thousands of dollars you spend in this university, you will be alive to take the degree? Are you sure about it? No, but you're still doing that. Same with me. I am teaching you today. So next week or tomorrow, when you come to the class, I will ask you question, I will give you question, but am I sure that I will be alive tomorrow or next week when I come to ask you question? No, I'm not sure, but I assume. This is my assumptions. So what is our assumptions? What is the assumption of in our life? in our life, the assumption is life will be going on. We know that, we know we will die. You know you will die, I know I will die. But I don't think that I will die right tomorrow. Right? So what is our assumptions? What is the assumption of life? The assumption of life is life will be going on. That's why you and me, we involve in multiple things that will give us result in future. We will die in future, but we do something that will result in future as well. So we don't think in future I will die, so I don't have to do anything. Because one day I will die, why I need to graduate? One day I will die, I need to find why I need to find a job? One day I will die, why I need to get married? Because I will die. But we never think like this, because that's not the life run. This is not the way that life run. If you want your life run smooth, you have to be very positive that your life will be keep going on for longer period of time. How long? You don't know, I don't know. But we always assume that. So this is called going concern assumption. So we assume that our life will be going on. That's why we enter into multiple contract, like as you. Do you think you enter a contract with university? Yes, you and university has a contract. What contract? The contract is you will pay them money, they will give you education. Right? So you have a contract with university that after 4 years, you earn the degree, you learn a lot of things, and university will give you a degree. But again, are you sure that after 4 years, you or me will be alive to receive a degree from university? No, we're not sure that, but still we're doing that. This is called going concern assumptions. Company do exactly same thing. Company always assume that business will be going on in future. You know that one day your company will bankrupt. One day. That one day could become tomorrow. One day could become after 1 year. One day could become after 100 years. One day could become after 200 years. But one day will come. Right? But we not waiting for that day. We don't think about that day. We think about the time, that day and now, the between. This is now, this is the day our company will bankrupt. We think about this gap. So this is called going concern assumption. We assume that our business will be going on. That's why we enter into multiple contract with the customer. That's why we sell product to customer on credit. Are we sure that this customer will return us money back? Are we sure about it? How many percent we are sure? We are sure 100% that this customer will give me money on time? No. Account receivable. Remember account receivable? Are we sure that this account receivable will pay me money after 2 weeks? Am I sure about it? No. But still I am doing that. So this is called going concern assumption. So what is going concern assumption? Going concern assumptions basically says that company assume that business will be going on in future. That's why business or company involved into multiple contract with different people. Multiple contract with different people. You are paying a school fee to university for 1 semester. You are paying fee to university for next 6 months. 6 months is a longer period. Do you know what will happen to you in next 6 months? Do you have any idea? No. No idea, but still you doing that. Like as me, when I was student, I did the same thing. I paid my tuition fee for 1 semester, but I wasn't sure that after this semester, I will be alive to move on to semester 2. I wasn't sure, but I did it. Not only me, Everybody did it. Your parents did, you did, your friends did, I did, my friends, my relative, everybody doing that, because we all have that set of assumption in our mind. So company exactly same assumptions. So that's why in company we purchase material on credit, account payable, because we assume money back to the supplier. Company sell product to the customer on credit. So after a short period of time, company will receive money from account receivable. Exactly, company borrow money from bank lend money to company, shareholder invest money in company, because shareholder in a hope that one day this company has a profit and they will receive dividend from company. What's going on here? This is all about going concern assumptions. We all have that set of assumptions. Everybody understand that? So that's the idea behind going concern assumption. We assume that business will be going on. So that's why we enter into multiple contract with multiple people for future. That's why we always say that future is uncertain. I hope you know future is uncertain. Future is uncertain means we don't know what would happen in future. Like as for example, 2 years back, have you ever thought that one day you will finish one semester or maybe 2 semester online, studying at home? Not even a one day you go to university, but you finish one subject. Have you ever thought about it? No, me too. I never thought that I will teach more than 1 year just staying at home. Not even a one time I see my students in person. I never thought that. So, but we are doing that. So that's why we always say that future is uncertain, but we have that assumptions that our life will be going on. No matter what situation we face, we always keep the positive mindset. So company also have a positive mindset, because company is a group of people. People have positive mindset, so company also have positive mindset, because company is not a living thing. Company is a group of people. So whatever people think, that company do, right? So this is called a going concern assumptions. Everybody understand, right? So that's why next time don't ask me that, teacher, why companies sell product to customer on credit, because maybe customer bankrupt. That how can company get money? Yes, you are right. Customer bankrupt. Company know that this customer may be bankrupt, but still company sell product to customer on credit. Same like as you and me, we know we will die, but still we do many things that result will be out in future. Like as for example, NASA scientists, they spend not only months or years, 10 years, 15 years, 20 years, 30 years for one single research for 30 years. Are they sure they spend billion dollars for that 30 years project? And then are they sure that after 30 years they will be alive to succeed in to get success in this project? They're not sure, but still they're doing that, because again they have a positive mindset. NASA is an institution, research center, so they also have a positive mindset. They have going concern mindset. So I hope everybody understand it. So can we move on to next? So that's all about your assumptions. So assumptions are finished. Now let's move on to the second operating guideline. So we have a 3 operating guideline: assumptions, principles, and constraint. All right, assumption, principle, and constraint. So let's talk about the So let's talk about the second one, which is principles. Okay, so second one is the operating guideline principles. Principles. So what these principles tells us? Principles says that how transaction must be recorded. How transactions must be recorded. How transaction must be recorded. How we record the transaction. Transaction means anything, any activity, buy, sell, whatever. Right? How transaction must be recorded. So transaction must be recorded based on three different principles. So the first principle is revenue recognitions. Revenue recognitions. Revenue recognition same like as your earned or unearned revenue. Revenue recognition means the revenue will be recognized if actual product or services are transferred. If the product and services are not transferred, this is not revenue, it's become unearned revenue. Revenue means, remember, if I say revenue means income statement. If I say unearned revenue, that is your balance, that's your current liability. You remember that? Yes or no? Everybody remember that? Revenue means income statement, right? Revenue is your income statement. Unearned revenue is your current liability. Remember unearned income? Go back to your current liability we just did before the break. So that's the meaning of revenue recognition. Revenue recognition means if the product and service are not exchanged. Not exchange means you give me money, I give you product. This is revenue. Revenue recognize. Revenue recognize means revenue arise. But if I receive money, but I haven't give you product and service, this is not revenue recognized. This is unearned revenue. Unearned revenue means this become your liability. This is not your revenue. If it's revenue, this is income. Unearned revenue is not income. Remember that. All right, same thing. All right. Let me write down for you. Remember, revenue means Revenue means income. Unearned revenue means this is not income. If this is not income, what is this? This is current liability. That's the meaning of revenue recognized. Revenue recognized means actual product service transfer. Product service transfer means I give product to the customer, I give service to the customer, and customer will pay me now or customer pay me later, but at least I give product and service to the customer. But here I haven't transferred my product to the customer, my service to the customer. Even customer already paid me, but I have not transferred yet. So I haven't earned that money. So this is not my revenue. This is my unearned revenue. Everybody understand? Okay. I ask you one more question. I want to check something. I give example of unearned revenue. Do you know construction? You know construction companies? Construction like as, for example, building a metro rail in Ho Chi Minh City or in some other places in Vietnam. So metro rail. So I write here metro. Metro made by the construction company. This is construction company who build a metro. Now what happened? Government paid money to this construction company. Let's say government paid $100 million. Government gave $100 million to this company to build a metro. So do you think this $100 million is it revenue or is it unearned revenue for company, construction company? Always remember, government pay them money first because construction company $100 million. They need money to buy the equipments, resources. So this $100 is unearned revenue.
Unearned revenue.
Unearned revenue.
Unearned revenue for this company, right? Okay. And government signed contract for 5 years to build a metro. For example, year 1, 4, and year 5. Let's say first year they finish 20% project. Second year, 10% project. Third year, 10% project. Fourth year, 5% project. And the fifth year is 15%, right? So it's 20, 30, 40, no. So it's 20, it should be 10. Right? So total, it works like this. So first year, can you tell me first year, okay, if I ask you question, first year, did company has any revenue? First year. First year, this company has any revenue first year? Or still unearned?
Still unearned.
No, I think this still unearned.
Earned or no unearned, no earned, no revenue first year or have revenue first year?
I think they will have
no.
revenue a little.
If anybody say yes, tell me how much.
I think no.
How much? If yes. If anybody thinks yes, first year this company has a revenue. Some
Maybe
yes. How much?
Maybe 20% of the unearned revenue.
Yes. So first year, company has a $20 million as a revenue, which belongs to income statement, and $80 million is unearned revenue that belongs to current liability. Second year, 10% of this 10 million is 10 million, right? So, and 80, 10, 70 million. This is revenue, this is unearned revenue, so on, so forth. So I'm just trying to explain you, if service already performed, whatever service already performed, recognized as a revenue. Something has not performed, 80% hasn't performed. So 80% will be unearned. All right. So that's the meaning of, don't be confused with this example, but I'm just trying to explain you, this is actually happened in real life. When somebody give you $100 for work with that person for 4 weeks, you give me $100 as a teacher, can you teach me for next 4 weeks? I am giving you $100. So this $100 right now is not my income. At the end of first week, I earn $25. Second week, I earn another $25. So means by the end of 2 weeks, I earn $50. But you already paid me 100, so 50 is my unearned, 50 is my current liability. So third week, another 25, and the last week, yes. So $100 I earned at the end of 1 month, even though I received in advance. Everybody understand that? So that's what I am trying to explain you here, revenue recognitions. Everybody okay with revenue recognition? It's same like as your unearned revenue. If you understand unearned revenue, then this is the same thing. But this one, they focus on the revenue recognitions. All right. So if revenue is not recognized, that's become unearned revenue. If you haven't supplied product and service, but you received money, that is not your revenue. That is your unearned revenue. Unearned revenue means it belongs to your current liability. Revenue only items that is your earned. You do not sell product, but you receive money for that product. This is not your operating income. No, at all. Remember that. Everybody okay with it? Anybody any question or move on? Let's move on to the next, if no question. Now, next is a matching principle. Matching principles. Now, what is matching principle? Now, let me give you example first to understand matching principle. For example, you produce 100 products, 100 units. Units means product. And you sold 80 products. All right. And the cost of each product is $7 each. So this is the cost. All right. This is the cost. And when you sold at $10. This is your income. Remember, this is your earned income because you sold it, right? That is your income or sales. Can you tell me how much is profit? Can you calculate for me profit?
$100.
How much is profit? $100. Everybody $100?
Yes.
Everybody? In this class, anybody, parents, have any shop or any small business? Or you help your parents in doing small business in this class? No one has parents, like as maybe some grocery shop or some vegetables shop or any other shop, any other business like as selling something, retail shops or supermarkets or anything? No? Nobody?
My parents sells eggs.
Sorry?
Well, my parents sell chicken eggs.
Okay, so do you help them to do some calculation or doing like that? Do you help them?
Calculation profit? Yes.
Yes. Do you help them? And they believe you? Your calculations?
Sometimes.
Sometimes. They don't believe you all the time because I don't believe your profit. Because your profit is wrong.
I think it's more than 100.
How much? Tell me exact number. Like she said, $100 for. If you want to calculate Nguyen, if you want to calculate, you can calculate again. All right, but this is wrong. Chow said more than 100. So tell me how much. Tell me exact number. Calculate. This is a very simple question. You have to income minus cost. It's very simple, right? It's not something tricky or I have to teach you this. It's very simple. So let me write down what Nguyen Phi said. Maybe I think majority of you will say that, yes, teacher, 100. Of course, it's 100. Why not? Sales minus cost is profit, right? So you said, some of you said, sales is 80 multiplied by 10, which is 800, right? And cost is 100 multiplied by 8. No, sorry.
It's 7.
Oh, sorry, 7. 100 multiplied by 7, right? So 700. All right. So which means? Right. So here is.
I think it's 214.
Okay. Now you said 240. Let me check. Someone sent message as well in the chat box. Someone said 300. Okay. Someone said 300. How 300? Not twin. Can you please tell me, because your calculation is very, very strange. Not twin. Tell me.
Can you hear me?
I can hear you.
I think 100 is income, revenue, and 20 product.
Wait. How much is revenue? Sales.
You still have 20 units and 100. Yes.
So
you also you still sell 20 units more.
So I sell more. Did I say I sell more? I didn't sell 20 more. I sell only 80. I didn't sell 100.
Yeah, how about 240?
Can you tell me how did you calculate this 240?
Yeah, I think you have cost a on cost 700 and you only sell you have 100 units but you only sell 80 units, so you have only 200 to 20 unit left, so I don't know, let me test you.
So your profit is, how much is your profit? $240. Tumin said 300. Right answer is yes. Chow is correct. 240. Now let me explain you how. You are selling 80 units, but you calculate cost for 100 units. Why are you calculate another 20 units cost? You sold 80 units. So you sold 80 units. So the cost should be matched. Then your profit will be a fair number. This is your fair number. If you said you sold 80, right? But you calculate cost for 100. Is it fair number? No, it doesn't make any sense. If you do like this, okay, you said, no teacher, this makes sense to me. Okay, I explain you what is the problem. Here is the problem. What problem have? This number, why there is a problem? Look here, sales 80 units. This is per unit, right? This is per unit, 1 unit. 1 unit selling price is $100. For 80 units, selling price is $10, sorry, total is 800. Cost is $7 per unit and total units 100. Now 700. Now, sales minus cost, 10 minus 7 is 3, right? 8 minus 7 is 100, right? Now, can you tell me what number I should write down here? Should I write down 100? Or I write down 80? What
80.
number I 80. If I write down here 80, 80 multiplied by 3, is it 100?
No.
No.
No, so not 80. So what should I write here? I have only 2 options. I write either 80 because I sold 80, or I 100, or I produce 100. I can't write some strange number. You can't write here, you can't write 100 divided by 3. So you cannot write here. Can you write down this number, 33.33? Can you write this number? This number means you sell 33.33 units. Total units are 33.33 and 1 unit profit is 3. Did you sell 33.33? No, this number doesn't make any sense. So that's why if you say we calculate profit like this, this is wrong. This is completely wrong. So what is the right? Right answer is 80 multiplied by 10. This is your sales, right? 800. Cost also 80. Remember, I said unit. Don't match the price. If you match 10 and 10, you have no profit. Only unit. Remember, match the unit, not the price, not the cost, which is 560, so which is 240. So now you can see, look, profit. How many units you sell? 80 units you sold, and 1 is 3, so total is 240. That makes sense, but that doesn't make any sense. That's the meaning of matching. Matching means match. What match? This one, your sales unit must be, your sales unit must be matched with your cost unit to estimate the exact profit. This is called the principle, matching principle. So this is wrong. This is right. Everybody okay with it? Matching principle? Remember these rules. This is the rule of business. Any business in the world. This is the rule of business to calculate your exact profit. The unit you sell, the cost of unit will be same. Of course, you are selling 5 unit. How much profit do you have in this 5 unit? So obviously cost will be 5 too. You are selling 5 units and parents ask you how much profit do you have in these 5 units. So do you think you will use more than 5 units? Of course not. If you use more than 5 units, maybe your parents will say, what are you doing? You're selling 5 units, but your calculating cost is more than 5 units. That makes sense, right? So here we are calculating the profit of 80 units. We are not calculating profit of 100 units. Now, another question. I want to check who focused. Now, how many I produce? 100. How many I sold? 80. Where is 20? Where is 20 units? What is 20 units? Or where is 20 units? Storage. What do you mean by storage? Tell me something that I taught you. Use the word that I use, the beautiful
Inventory.
word. Which inventory? Which inventory?
Yes, it's closing inventory.
Closing inventory, current asset. 20 multiply by what? What is the value of inventory? How much is 1?
7.
7, not 10, because 10 for selling. We are not selling, we still holding. So $140 is my closing inventory. Why? Because this is unsold. Remember now? Remember that. So everything is connected with each other. One number affects the another number. One items affect the other items. In accounting, everything is related. You know that everything has a relation: assets, liability, equity, income, expense. The all 5 items, they have a relation, some kind of relation, some certain relations. Right? One up, another down, one down, another up, or one up, another up, something like this. They may have a direct or indirect relation, but there is very direct relation between income statement and the current asset, right? Because closing inventory is your current asset. Everybody okay with this matching principle?
Yes.
Move on to the last principle. I guess we have 3 principles.
Yeah.
Last principle is very simple and very easy. Let me write down here on the top. The third principle is that's very simple. That's obvious actually. The third principle is so let me write down 1, principle 1, principle 2, and principle 3. So the third principle is a full disclosure. Full disclosure. You know what is the meaning of disclosure? Everybody knows disclosure? In simple, no. Disclosure, simple English, disclose. Disclose means inform. Inform means tell. Full disclosure means whatever happened in company, you must disclose in your financial statement. You should not hide any information for the users, because that information may not be useful for one user, but it may be useful for the other users. This is called the full disclosure. We disclose, we must disclose. Disclose means write down in the financial statement. This is called disclose, inform, tell. We must disclose all information, financial information in financial statement. Why? Because that information is important for any kind of user, right? So that's the meaning of full disclosure. This is obvious, actually. This is not something tricky or something different, right? So everybody okay with this full disclosure? Now your principles are finished. Now let's move on to the last operating guideline. So the last operating guideline is constraint. Nguyen Thi, what's her name? Nguyen Thi Nu, where are you? Nian Xiang, why you didn't turn it on your cameras before? Min Hugh, I don't see you. Nguyen Thi Nu, why you turn it off your cameras? Nu Nye, where are you? Next time this time I'm giving you warning. Next time I will not allow anybody from tomorrow. Remember that. I will not repeat again. So if you're absent, you are absent. You know that information is very important. If you turn it off your camera, I don't believe you that you are really listening me or you are studying me. You can see that this information is not easy sometimes. All right, it's very important, especially topic 1, because once we start calculation, maybe most of information go out from your head. You have no idea what teacher is talking about, why we calculating these numbers, because you do not understand all these principle, all these assumptions, because these principal assumptions all about calculation numbers. So if you keep your cameras off and you watching movies or you chatting or you sleeping or you cooking or you doing something else, that's not nice at all. All right, so I am here for 3 hours. You're supposed to be here for 3 hours without doing anything else. All right, I will not repeat again next time. And no excuse. I'm here, I'm there, I went out, I went in. No excuse. I don't want any excuse. I just want you to be here. You paying your tuition fee. You parents work hard for your tuition fees. So I don't want you give me any excuse. I don't need. If your parents says that, I only believe your parents, not you. All right. So no excuse at all. Now let's move on to the next one. So next is constraint. Right. Now, what is the meaning of constraint? Constraint is the third operating guideline. So third operating guideline. Right. Constraint means you have some kinds of freedom or flexibility when you record financial information. You have such kind of flexibility when record financial numbers or financial information. Financial information. You have a certain flexibility. You have a certain freedom when you record any financial information. Now, what constraint we have? One is conservatism. Conservatism. Conservatism is very obvious. It means future income is not present income. Future income is not present income, because future income will be unearned income. You understand that? Something you will earn in future, it cannot be your present income. Something you earn in future cannot be present. Obviously, something you're going to earn in future, do you think you recognize as a present income? Of course not, because you haven't earned it. If you haven't earned it, cannot be present income. So obviously, but future expense is present expense. Present expense. The idea is something you're gonna pay in future. Something you're gonna pay in future. Can you pay now? Yes or no?
Maybe yes.
Yes.
That's what I said. Future expense is a present. Something you're gonna earn in future, can you record as your current income? No, of course not. That's obvious. This is called conservatism constraint. This is obvious, actually. This is not something strange. All right, something you're gonna pay for future, can you pay now? Yes. Something you're gonna earn in future, can you record now as an income? No.
Yes.
No. Something you're gonna earn in future, we cannot record now as an income. But something you're gonna pay in future, can you pay now and record now? Yes. So we never say that if in future we have expense, we also have income. So why we need to save money? Do we believe that? Do we have expense in future? Yes. We have to pay for bills. We have to pay for food. If you don't do anything, but at least you have to pay for food, right? So you have a future expense? Yes. So we know that in future we have expense. So why don't we think that if in future we have an expense, we also have an income in future? So why we need to save money right now? Do you agree? Disagree? I repeat again. In future, we have expense. We have future expense. and we also have future income, right? So why we need to save money? Do you agree or disagree?
Well, we have to save money because we don't believe that, well, in the future we may have income or we may cannot work.
Yes,
We cannot
exactly.
income.
We not certain that in future we have income. We don't know. We may have job, we may not have job. We may help someone, we may help us, someone may not help us. So we don't know. So that's why we have to save, right? So exactly. But expense, always have expense. Every time have expense. You don't go anywhere. You don't go to eat fast food, even though you stay at home day and night. You even though don't step out, still you have expense for your food, for your water, just very basic things. House, which is pay rent, if not owner of the house. So this is called conservatism. So everybody understand? The second one is materiality. All right, so only this one left, materiality. We will study this materiality constraint in the next lecture, and topic 1 is finished. So next class, which is tomorrow, so we will start with topic 2. All right. Materiality, you have some small calculations, so tomorrow I will explain you with this. So everybody okay with it?
Yes.
Okay. Anybody any question regarding today's lecture? Anything? No question. If no question, then we stop here. So I repeat, before you come to the next lecture, please have a look all these items, because some of items you may know before. That's easy to understand. Some items completely new for you. So you may need a revision, that what I told you in the last lecture. So please do your revision at least 1 day before the class. But again, the more revision you do, the more things you remember. All right, the more things you remember, more active and easily you can solve the question. But if you need to open the book every time to look at the question and meaning and things, so that means you haven't revised yet. Revise means all information must be here. If I ask you something, it should become in your mind. Again, you need a practice. The more you revised, the better you understand the things. All right. If again you do not understand, you can ask me tomorrow or you can send me email today. All right.
Oh, teacher.
Yes.
Next lesson is on Saturday afternoon.
Oh, so
isn't it?
today is Thursday. Oh, sorry, Saturday. Yes, Saturday. I thought maybe today is Friday. Yes, I will see you Saturday afternoon. Yes.
Yeah.
No, sorry, not tomorrow. Saturday. You have. I already sent you the link. So we will start 1 p.m. not 1:30. All right, 1 o'clock.